This video is designed to explain the basics of a statement of income to you. Remember that the main purpose of trying to draw up financial statements is that people who own businesses or people who have an interest in the business, in other words, stakeholders, can see how badly or how well the business is doing. And the first part of that is by looking at whether or not the business has made a profit and of how much. This is the role of the statement of income. To calculate the profits or losses of a business, you will quite simply work out the gross profit that you've made first. In other words, if you look at your total sales minus your total purchases or the money that you've spent on the goods that you are buying and selling. This will then give you the profit as a result of simply trading in that activity or buying and selling that particular item. It does not look yet at all the other incomes and expenses that are also part of running the business. So this gross profit is simply your sales less the cost of making those sales. Once you've calculated your gross profit, you will then want to go and work out what your actual net profit at the end of the day is by subtracting any other expenses that you may have incurred in running the business. These are the expenses that are not directly attributable to those particular sales that you've made, but are very important in order to be able to run the business. Any profits that are made are then attributed to the owner. That's why the owner started the business. And so you would add your profits to your equity if you think back to your accounting equation. Incomes will increase your equity, and obviously your expenses will decrease equity. Hopefully you remember that from the activities you've already done previously. So if we have a look at our accounting equation that looks like this, do you remember that your equity was made up of your capital and drawings and your profit is made up of all your incomes and all of your expenses. Incomes could have been things like your current income, rent income, interest income, as well as sales, etc. Your expenses would then be your cost of sales, as well as things like material costs, wages, salaries, water and electricity, and all of these other bits and pieces. So your sales and cost of sales are combined to make your gross profit, and then you will add all your other incomes and subtract your expenses. And all of these will then be taken to calculate your profit, which is what you're going to use to calculate your statement of income. Let's have a look now at how you're going to balance all these other accounts, all your assets and all your liabilities, as well as capital and drawings. It's very important that in order to try and calculate all of these things for your statement of financial position, which we looked at previously, you need to know what's left. Do you remember that when you were busy doing your Smarties and Jelly Tots activity, some accounts like bank had Smarties and Jelly Tots? Well, what you need to do is work out what is the total in those accounts. So if we have only things in one side, in other words, only Smarties or debits, or only Jelly Tots or credits, all you need to do is simply add them together and get a subtotal, which you will show like this. All you do is you put a simple line above the amount and then leave it open at the bottom. This is so that next month you can carry on adding extra transactions in there to get the new total at the end of next month. However, where you have both debits and credits, or both Smarties and Jelly Tots, it gets a little bit more complex. In this case, what you do is you look at both sides and you say which side has the bigger amount. Are there more Smarties or debits, or are there more Jelly Tots or credits? In this case, let's assume that because there are two things on the debit side, this is going to be the bigger amount. Firstly, what you're going to do is you add that bigger side together to get a total. Now, because this doesn't tell you what is left over in the account, simply the total number of Smarties, you are going to put a big line underneath it as well, because you're not going to carry this down to the beginning of the next month, but you do need it to see how much you had overall. You are then going to transfer this amount to the other side also, even though you didn't have that many credits. You're going to make both sides the same. You can now have a look and see, well, if my total is bigger than my Jelly Tots or credits that are shown over there, how much do I need to fill in? Or how much will be left over if I eat one Smartie for every Jelly Tot? That is then going to be the difference or the balance, the amount that is left over. So I enter that missing amount over here, and then I need to bring it down to the beginning of the next month. So this over here is the same as that amount over there, but above the total I call it the balance that I'm going to carry down, and below the totals of the first of the next month I will call it the balance that I have brought down. This is then the amount that I'm going to start the next month with, and then I will add my further transactions to that.